Hey guys, this is Mr. Oxy coming at you live from Palm Beach in Florida. It is Friday evening. It is May the 13th. It's Friday the 13th, if that means anything to you. And I think today was a pretty good day if you're in the stock market. What a difference a day makes, right? So yesterday, I actually felt almost obligated, certainly encouraged and motivated to make a video saying, stay calm. The sky is not going to fall. We're not all going to wear blue caps. And today we have a complete turnaround compared to what we had experienced yesterday and actually for the past week or so. What we're going to do today is just talk a little bit about Oxy. So Oxy's first quarter for 2022 is in the books. And we're going to review some of the highlights from the first quarter. We're going to look at some of the financials. And we're going to see what the experts are saying in terms of where it's going and what the predictions are. And then we're going to wrap it up. So just a few minutes we spend together taking a look at Oxy, and hopefully if you're long in Oxy, you're feeling pretty good today after Oxy had a day where it went up almost 8% in one day. So on Monday, regardless of all the hullabaloo with the stock market crashing and the sky falling, on Monday this past week, we opened at $63.11 with Oxy, and on Friday today, we closed at $64.08, so just $1 or so up from where we started on Monday. Let's take a look at the first quarter results, and this is sort of a quick highlights reel. By now, you probably all know what Oxy did and where it went and what happened. It repaid $3.3 billion of debt in the quarter, which is about 12% of the total outstanding principal. The earnings obviously came in at about $2.12. I joked yesterday that my expectation was $2.25. It wasn't a joke. That was my back of the napkin calculation. So as far as this particular analyst is concerned, they underperformed, but Oxy came in pretty good at $2.12, beating the expectations that the analyst set that had a median of around $1.97. Cash flow from continuing operations, $3.2 billion before continuing operations, and working capital of $4.2 billion. Pretty good in terms of cash flow as well. And of course, free cash flow before working capital of over $3.3 billion. OxyChem continues to shine. This is no longer a diamond in the rough. This is a fantastic performer as part of the Oxy portfolio. Quarterly pre-tax earnings of $671 million. Total year pre-tax earnings guidance increased to between $2.1 billion and $2.4 billion. What a performance, great stuff by OxyChem. Midstream, in reality, continues to disappoint. I'm not a big fan of midstream right now in general, but I am quite pleased with Occidental in general overall. So let's take a quick look at some of the financials here. So we can see on this particular slide here, the diluted earnings per share, $4.65. And of course, the adjusted diluted earnings, $2.12. But the main thing about this slide is look at the difference in terms of the picture, right? A negative in the first quarter of 2021 of 36 cents and a positive $4.65 for the first quarter of 2022 compared to the first quarter of 2021. Awesome. The average diluted shares outstanding, approximately 950 million shares. That is significant because Oxy is launching a $3 billion buyback program, which is going to take about 50 million of those shares off the table. So that's pretty good for us as shareholders as well. So this is a good picture, even though there's only just two little things in the highlights reel here. Free cash flow is phenomenal, $3.3 billion, absolutely outstanding. The other thing that's interesting here is look at the line that says working capital and other. So if you look at the actual comparison year over year, operating cash flow from 2 billion to 4 billion, and then less expenditures, obviously up a little bit and leaving you $3.3 billion in free cash flow, an outstanding performance by Occidental Petroleum. Daily production volumes is interesting because there's actually been a slight decline. So if you look at the numbers, so on the left here, it says total US oil worldwide, etc. If you look at the numbers, you can see that the numbers, this column over here is Q1 of 2022. And you can see that the numbers are actually slightly below where they were for the last quarter of 2021. And if you look across this spreadsheet here, or a little layout on a row by row basis, you can see sort of 900 something and then dropping to just below 900, and then sort of close to 500 or so, dropping to 483. This is consistent. The other thing that's interesting here is the commodity price realizations, the average price for the quarter. WTI, Brent, obviously close to $100 a barrel, but not quite in terms of actual realized sales. So a slight difference there. The other thing at the bottom here, you can see the capital expenditures. The Occidental executive team, the management team, Vicky Holliburn team are doing a fantastic job, because despite all the hyperinflation and price increases for the first quarter of 2022, the capital expenditures actually went down by nearly 100 million, so that's pretty good. Last quarter was 937, and this quarter 858. Good job. The other thing I like about Occidental, just in general, is when you look at net sales, here we're looking at oil and gas, these little green bouncing arrows here, you can see quarter over quarter, every number is higher than the previous quarter. One thing that I particularly like in terms of my investments is companies that are growing. And you can see in this particular layout here, Oxy, in terms of pretty much every number that you're looking at, is growing quarter over quarter. And then obviously we expect the same year over year, especially at the current prices. If you look at the total revenue down here at the bottom, first quarter of 2021, 5.4, then 6, 6.8, almost 7, then 8, and now 8.5. Great job, Oxy. Same with the costs here. So if we look at the actual costs and other deductions, you can see that they've done a pretty good job in terms of maintaining where they're at. As a general rule, almost all the financials right now are looking like a pretty good picture. And as Vicky Holliburn said during the conference call, they have done some balance sheet repair as well. In a couple of minutes, we're going to talk a little bit about the highlights of the conference call, and then I'm going to wrap it up with some predictions, and then you guys can tell me what you think. Current assets, so for the quarter, we have current assets of just over $10 billion. We have current liabilities of 8.7. Why is this important? Because the current ratio, which compares current assets to current liabilities, should be greater than 1, and expressed as a ratio, 10 versus 8.7 billion is obviously greater than 1. So that's a good place to be. Long-term debt, I actually calculated the long-term debt to be about $27 billion. They came in just below my personal calculation at just under $26 billion. And I expect realistically during Q2, Oxy will probably knock off another $2 to $3 billion from that number, bringing them down to around 22 or thereabouts. Prices for the quarter, so I mentioned this briefly a minute ago. In the United States, the average price for WTI for the quarter, this is oil on a dollar per barrel price basis, $93. So one of the reasons why Occidental is doing so well is obviously because oil is trading at such a high price. So it's quite significant. Worldwide, 99.91, pretty good too. And if we look at the index prices on WTI, you can see why Oxy has been doing better quarter over quarter in terms of revenue. However, they've also been very, very stringent in terms of managing their capex and operational spend. But if you look at the index prices, obviously it's bounced quarter over quarter. And you can see at the bottom of the screen here, quarter over quarter, we went 58 to 66 to 70 to 77, and now 94. That's a huge jump from last quarter's 77 average to $94. And again, that's one of the reasons why Occidental is performing so well. A couple of highlights from the earnings call. So this is from the transcript. Janine Y from Barclays says, how are you thinking about production growth beyond 2022, given the medium-term growth debt reduction target? Vicky replied and said, well, I think by the time we get to 2023, our balance sheet is going to be very, very healthy. And as Rob mentioned, we expect to have the cash to be able to go beyond the $8 billion this year. And every dollar above $5 billion, that's $3 billion. Sounds a little bit confusing and convoluted, Vicky's response, but remember it's a transcript, so it's as she spoke and as she kind of gathers her thoughts. That's why it looks the way it does. But she's saying if any free dollar above this amount, above this $8 billion amount, would go to debt reduction. So they're being very clear in terms of how they will spend the sort of, let's call it expected windfall or sometimes unexpected windfall of free cash flow. David Denkelbaum from Cowen asked how quickly might be triggering a pay down of the preferred notes. Rob Peterson had an interesting response here. He said, if you look at the $3 billion of share repurchases, which I alluded to at the beginning of the presentation, $3 billion at $60 or thereabouts is almost 50 million shares, and the dividend of 13 cents currently per share, then you're still not going to be quite at the level of triggering the $4 per share Berkshire trigger. That is the trigger amount that we can keep in mind. So we need effectively for Oxy to get to a dividend of $4 per share as an ongoing dividend before the Berkshire trigger sets in and they can settle the preferred debt. So keep that one in mind. Rob continued, he said, a favorite way of returning value to shareholders beyond the dividend is through share purchases. But remember, we also have outstanding warrants. Those are sources of dilution. So we issued common shares as part of the acquisition as well. And if we do make a nominal increase in share repurchases in the 12-month period, it will automatically trigger the provision of targeting the Berkshire, talking about the preferred here, right? So if it gets to 4, then it's going to trigger the Berkshire payout automatically. So it's a $4, not 4%, that will trigger the Berkshire in terms of being able to pay off the preferreds. It's not a choice of, do you want to trigger the Berkshire? If we cross that $4 threshold, we will begin the process of the common return and the reduction of Berkshire preferred, right? So these are just matter of fact. It's not a guessing game. We know exactly where they're going and we know exactly what they're doing. And we know exactly that every dollar above $8 billion will be applied to debt reduction. Neil from Goldman Sachs said the supply chains in the US were relatively in dire shape as it relates to the US producers, and that would be a constraint on US growth. That's something that Vicky said earlier this year in March, a couple of months ago. Vicky replied and she said, anybody trying to increase activity at this point, she's talking about oil producers, not only in the Permian, but also worldwide, would have a very difficult time to be able to do that. And with respect to the macro, I really don't think there has been a time, pay attention to this one because this is significant to us going forward. I don't think there has been a time since I've been in our industry, Vicky has been in this industry for more than 30 years, where inventories and spare capacities are both very low. For more than 30 years since Vicky has been in this industry, or during the time that Vicky has been in this industry, she has not seen inventory and spare capacity as low as they both are now. An interesting chit chat here between Doug Legatt from Bank of America and Rob Peterson. Why would we not retire the preferreds? So Doug said, if you can reduce the cost of overall money, which is what you could do, for instance, at a 4 to 5% yield. Basically, what Doug is getting at is he was saying, if you want to sell the preferreds, you could actually just go to the market, especially when you achieve investment grade for Occidental, the company, because then you can borrow at a much lower cost. So why don't you just go out and borrow $10 billion and you lend the money from somebody, and you could effectively that borrow will cost you, let's say, 4 or 5%. That's what he's alluding to over here with his 4 or 5% debt. And then instead of paying Warren Buffett 8%, you just borrow money at 4 or 5%, settle the debt, and then you effectively just decreased your interest rate on the same amount of debt. So Rob says, oh, you mean I must go out and borrow to actually fund the retirement of the Berkshire preferreds? And Doug says, once you hit the investment grade, yeah, because you can borrow money at a lower cost. Rob says, and it's an interesting response, he says, it's not just the premium, it's also the return to the shareholders. There's got to be an equivalent value return to the shareholders at the same time. So $1, half of it will go to the shareholders and half of it will go to Berkshire, which comes back to that point I made earlier about the $4, right? The one triggers the ability for Occidental, the $4 triggers the ability for Occidental to actually start paying off the preferreds. And then it's kind of like a 50-50 mix. So a couple of things here just before I wrap it up. This particular slide here comes from the Motley Fool, and this shows you the performance of Occidental over the past 1 year compared to the S&P 500. So I mentioned this in my video that I shared yesterday. Maybe some of you have watched it and some of you didn't. But effectively, when you have a stock that has this type of a performance, in your investment portfolio, it kind of right sizes your portfolio. Maybe not entirely, depending on how much you hold and what your position is in Occidental. But when you have these outliers that perform like this, when the market is basically doing whatever it's doing, it makes your portfolio look a little better and look a little stronger. So an amusing little side note on this one is that my son, who, by the way, also owns some Oxy, and I had a chat yesterday, and he was saying, you can't beat the market. And, for the most part, that's true. No one can really beat the market. And that's why some people say you should just buy index funds and, just sock it away and keep it, and you'll do well. So anyway, my response to my son was, well, I was able to beat the market last year. And he said, well, yeah, you just got lucky. So I said, yeah, I just got lucky because I had Occidental in my portfolio, and so do you. So effectively, we both got lucky. But yeah, sometimes you do get lucky. And obviously, sometimes you have to experience a bit of pain when one of your stock picks, even though you've done good due diligence, pulls back and you lose on paper quite a lot of money. This is the other way around. So I kind of like Occidental, obviously, here for a whole variety of different reasons. Motley Fool goes to market. They call it the cap score and say, what do the fools think? And 95% of the CAPS members think that Oxy will outperform the market. Out by how much? So I went to Tip Ranks and just quickly had a look and see what the average analyst targets are. Currently, the analyst price target, the median is $69.28. We have 10 analysts saying a buy. It's a buy. 7 say it's a hold. 2 say it's a sell. Who is this guy with this high price target of $90? Well, the analyst with the highest target that I could find was Ryan Todd from Piper Sandler at $88, saying it's a buy. That's pretty good. And he just upgraded Occidental last month. So guys, that is sort of in a nutshell, that's Occidental Q1 2022 in the books. If you're long on Occidental, you're probably having a good time. If you're long on warrants, you're probably having an even better time, except for the fact that you are not going to enjoy some of those benefits like increased dividends. But either way, you're making so much money, you probably are trying to figure out how you can best spend it, let alone how you can mitigate your risk of paying too much taxes in your very, very profitable position that you're in. So that's a wrap on Oxy for now. On Q1, I look forward to your comments. Let me know where you think it's going. The analysts think it's going to about $70. I'm okay with that target. I think it's realistic. Might be a little bit conservative. I actually think Occidental can, depending on what the market does, from a macro point of view, if the entire market crashes, obviously Oxy can go down with it. In the same way, a rising tide lifts all boats. The opposite is true as well. If the market goes down significantly and we go into a recession, Oxy will feel that same pain as well. All things being equal, especially after a day like today, you can see Occidental going to $70, maybe even $72, $73 during this year. So it's kind of where my head's at. Let me know what you think. I look forward to your comments. Bye-bye.